Welcome to our discussion today about group insurance in 2030 and what does it look like. My name is Todd Eyler and I'm joined by my friend Craig Weber, and you'll see some pictures of us on this slide. I'm the Vice President of Strategic Marketing at Vitech. We're a core systems vendor that focuses on the group benefits space. And I will be speaking about the emergence of these new ecosystems for healthcare and wellness that are emerging to help consumers be more effective with driving better outcomes with their health and their overall wellness, why those are useful and how you need to fit into those. And then I'll let Craig introduce himself. Craig will be talking about the right way to actually for you to fit into those new ecosystems, and he'll present some interesting use cases around that. But Craig, go ahead and introduce yourself.
Hi, everybody. Thank you, Todd. It's great to be with you today to talk about the future of group insurance and benefits. I think there's all kinds of interesting stuff we're going to roll out today. And the spirit of the exercise is to really kind of push the thinking a little bit. So buckle up and join in the conversation.
All right, if you're all buckled up, I will begin. So you know my name by now, but an interesting trend I think we're all very aware of is just the escalation of health insurance costs. So health insurance costs total about $4 trillion in the US economy now. It's about 20% of the US economy. And it's just the growth of healthcare costs are very much unsustainable for the long-term health of our economy. And if you look at, on the top of the slide, you'll see that about 60% of US adults have at least one chronic condition, that being diabetes or obesity or heart disease, or it could be others, dementia-related chronic diseases like Parkinson's or Alzheimer's. But those 59% of adults generate 90% of the healthcare costs. And doctors, I think we all know that we should watch our weight and et cetera and exercise, and doctors have good treatment plans for dealing with many of those or almost all of those conditions. But if you look at the bottom of the slide, really these factors that are very legitimate stand in the way of consumers actually following those treatment plans: misunderstanding the instructions, forgetfulness, lessening of symptoms, lack of access to healthcare. Any number of factors related to their lives stand in the way of them effectively complying with those treatment plans. And the result is what we show at the top, is the 90% of healthcare costs. The good news is that technology is coming to the rescue, likely over the next 10 years. And I'm showing an Apple iPhone screenshot on the left. This is one of Apple's biggest initiatives with the iPhone to aggregate health information and provide value-added services like wellness apps. We're all aware of measuring your steps and your sleep patterns, et cetera. They're very focused on that. And again, I mentioned they're doing a good early work with aggregating electronic health record or other health data that can make it possible for us to manage our health. The problem is that most iPhone users that are using these wellness apps are already healthy. So it's not really dealing with the sicker people or maybe the older people that are driving much of those costs up above. So Apple will likely, they're very focused on building this ecosystem, but they need to really build out their ecosystem with partnerships to be effective there. So I'm just, if we look at the right-hand part of the slide, this is a quote from the Stanford medical faculty. It's a reiteration of what I said on the previous slide, but the issue is not that you don't know that you need to lead a healthy lifestyle and maintain ideal body weight and not drink too much or smoke. It's how do you get people to actually do that? And that's actually going to continue to be a central challenge. How do you actually change health behaviors? And, it's interesting that about 10 miles away from Stanford, where those faculty people work, is not a startup, but a 10-year-old company called Livongo Health, which has come up with a very interesting service that I think we can all learn from for dealing with this problem of being able to coach people and deal with those obstacles that prevent them from actually following through on their treatment plans. And I have a short video here that I think you may find interesting.
Today, for people with chronic conditions, the healthcare system is full of conflicting information, advice, devices, and data. That's noisy healthcare. But with Livongo, there's an answer. With Livongo's Applied Health Signals engine, after every interaction between Livongo and its members, there's an iterative feedback loop to continuously optimize for impact. How does it work?
Great job checking. Your blood pressure is 144/89, which is above target. Your readings have been trending higher over the past 2 weeks. Regular exercise is a great way to reduce stress and lower your blood pressure.
Livongo aggregates data from a variety of sources and interprets this data to create a unique proprietary set of health signals.
It's expected to rain tonight. Instead of your usual walk, you could head to the pool. Your YMCA is open until 8 p.m.
I think you get the idea with this, but you see the power of really just not having a UI with
Open until 8 p.m.
but actually active, proactive coaching that uses all of your lifestyle, all of your medical data to come up with a plan that's actually practical, that the person can actually follow through on and achieve the right outcomes. And this, you can imagine how this would really affect or impact the group insurance space. So the largest product area in group insurance is disability and group disability insurance, $43 billion per year. We all know that a huge challenge or focus area within group disability insurance is claims and the ability to be proactive in getting people back to work, prescribing a good treatment planning, having them adhere to that. And so this is some Gartner forward-looking emerging technology research where they're saying that with intelligent disability treatment plans, they expect these to become commonplace by 2030. We see the definition on the left: treatment plans customized to biochemistry, activities, and capabilities, significantly improve quality of life. But until now, healthcare professionals lack the data to create such plans. The good news is that the amount of healthcare data is exploding to be able to enable these plans. So the sources of data are the electronic medical records, the wearables data, like I showed on the first slide. I'll show a bit about genetic data on this next slide. We have telehealth data, but there's a mountain of data that's growing about 50% per year. There's currently 2,300 billion gigabytes of health data that's growing at 50% per year to help enable these plans and have AI applied to that to actually construct these plans. So I think it's we can see, if you can imagine, what kind of the impact that this could have on the group disability line of business, in particular, critical illness and voluntary benefits, but really many of these product lines will directly benefit from this more intelligent approach to treatment plans. But a key point I'm just trying to make, though, is that the trend is toward these ecosystems where you'll have sort of a platform like an Apple or probably others that aggregate data, where people go there for certain parts of their lives, in this case, health or wellness, and can take a very proactive approach to achieving the right outcomes in those areas. One interesting area that is sort of emerging is the area of genetic data. And so, I mean, since the Human Genome Project started in 1990, and the first iteration of that stopped in about 2003, where they could map the whole human genome. At that point, it cost about $10 million to do that, and now it only costs $10,000 or less. So it's becoming very inexpensive to do all the genetic sequencing. And there's a lot of interest in it. There's been a lot of interest in it by obviously doctors and by consumers. You see the DNA kits were the genetic kits and the ancestry kits were very popular from about 2013 to 2019, where people could understand genetically kind of at a high level if they had any health risks and also have a better view on their ancestry. You can see that the sales really tailed off, though, in 2019, and they have to the present, because of people were paranoid about sharing that genetic data and have it be misused. So although this data will likely be very helpful from an underwriting perspective, there's a lot of consumer privacy concerns about it, and there's also challenges from a regulatory perspective where we're just not really protected right now. So if we have genetic data that's attached to an electronic health record, for example, it's protected by HIPAA. But if it's not directly attached to the electronic health record, it's sort of fair game, and for use by anybody that wants to use it. So there's a lot of work that needs to be done from an industry perspective on just making sure that consumers are protected in the right way to actually be able to use this data. And but it's a longer term data element that I think will be, more popular and provide a more central value add within the underwriting process. But the point I'm trying to make before I pass it off to Craig is really the emergence of these new health and wellness ecosystems. I mentioned Apple as an example, and the importance of you as group insurance companies seamlessly fitting into those new ecosystems so that you can play in the right way and survive in this new emerging business model. And with that, I'll pass it off to Craig to describe some of these scenarios that you can maybe expect in about 10 years or so.
Thanks, Todd. I think you've done a great job highlighting where we are going with data and with ecosystems and new tech like AI. And this will fundamentally change outcomes, but also the consumer experience. So what I would like to do is explore 3 scenarios about the future of benefits from the consumer's perspective, and think a little bit about how their experience will change based on the industry's reaction over the next 8 or 10 years, something like that. So let's dive right in. We're going to go fast forward to 2030. You're going to have to play along with my graphics and storyline a little bit here, but I'm going to tell you 3 stories. We'll start with one that's called instant enrollment. So we all know the challenges of enrollment today, but in 10 years, what will it look like? So the story here is Bob on your right is applying for a sales job. Janet is the head of sales. They've had a few conversations. They've kind of navigated to this point where finally Bob is agreeing, yes, I'm going to take this job. So congratulations. We're going to agree that Bob is going to start. We're going to set a start date. What happens from here, though, is a little bit different from what happens today, because Bob has filled out a job seeker profile, and this is he's basically providing a view into some of his personal demographic data, things like his family status, kids, spouse, etc., his age, and this is all packaged up and provided to Janet, the hiring company, in an authenticated way. So there's no more background check from this point. Bob is entering via a blockchain-enabled solution that authenticates who Bob is. Bob has also suggested by his profile what kinds of core benefits he wants. And so when he signs on the dotted line, he immediately gets access to health, disability, other benefits that traditionally are kind of the core of the benefit package. In addition, he's going to go home tonight and talk with his spouse about these additional benefit options. These are things that the employer is providing as kind of a sweetener. This is the battle for talent age. So he's got additional options. He can work through those, and he can enroll in those at his leisure. The system, of course, is also going to follow up with him and guide him through this process. So he's not, chasing paper around. This is all going to be delivered to him in a seamless way. What that all amounts to, really, it's a few things. It's the instant identity authentication of Bob in the door, so we know who Bob is as we're hiring him. It's also a lot of pre-fill of his profile info. And by the way, Bob has signed up with this service. He made the same information available to 3 other potential employers at the same time. So there's not a whole lot of difference based on where he is hiring into. His profile is available to all of them equally. There's a baseline of benefits at the moment of hire based on that profile, which is very helpful to establish kind of the working relationship very, very quickly. And then there's the add-on benefits via auto enrollment. So I'll take a breath there. Maybe Todd, if you want to jump in with some thoughts on what this scenario looks like. What does this prompt in your mind? What are some of the challenges inherent?
I'm a little curious about what is the source of the pre-filled profile info? Is it a broker, or is that some other industry entity that the consumer trusts, or who holds that and who keeps that updated?
I think this is, in my mind, this is more of a service that is being provided by a third-party service provider, and it could be one of the providers today who are active in this space. But there's certainly an acknowledgement here. You mentioned risk and people being unwilling to share data. There has to be a trade-off of what the benefit is to providing that data. And so, yes, this is a little bit futuristic in that people are now pulling back slightly, but I'm going to say 10 years from now, Bob's going to say, you know what? My profile is what it is and people can see it. And a lot of it is public data anyway. And a third-party provider probably captures that.
And then how's the profile data updated to make sure that the next time when Bob's up for enrollment, next time it's accurate?
Yeah, I mean, this is also kind of falls back on the employee to maintain that profile. There probably is a process to prompt them to do that. But over time, this is really what is known about the employee is maintained by the employee themselves.
Okay. And it would still be up to the employer to keep the employee educated about their benefits. So even after this instant enrollment, if his life changes, he has a new child or et cetera. Yeah.
Yeah, that's a great question. I mean, there's obviously some level of robo advice. You could put all kinds of stuff in that enrollment platform, including live video, personalized video, live advisor contacts, all sorts of things. But the point is that it's all delivered in a much more digital model. And that's really the difference in what the benefit is really to both sides. There's an efficiency benefit for the employer, but also for the employee to get it in a way that they prefer to get it.
Mm-hmm.
All right, so we'll move on to the next one. Thank you for those questions. Let's try scenario number 2. We call this one coordinated claims. Sort of self-evident where I'm headed with this one, maybe. But let's talk about Darren. Darren owns a drone company, and apparently a very successful drone company. He's driving a big 28-foot truck. So this is what he does for a living. He owns the business. One day, Darren is driving to a job. He gets in a horrific accident. Poor Darren. He is somewhat injured in this accident. He's got some soft tissue damage. He's got damage to an arm. And so you can see here from the high-tech graphic that he's having trouble flying his drone. He can't even land it. So that's a definite problem for a drone company operator. Good news for Darren, when he gets to the hospital, his medical kind of check-in process includes a data share option. So he can opt in to data sharing across his medical insurer, his disability insurer, in this case, even workers' comp, because all that data is relevant to the flow of benefits that's gonna come from here on out. He opts in and he understands that this is gonna cut the paperwork and make things a little bit easier for him. When he gets a disability claim submitted, it is paid. When there's workers' comp issues, when there's back to work issues, all this sort of stuff is coordinated across all 3 insurers, or one insurer if they're offering all 3 products. So what have we done with this scenario for Darren? We have done an opt-in model across 3 different product lines. There's care and claim coordination, and there's automated claim processing. So this is really about reducing stress and paperwork and the hassle of health and health-related insurance. And Todd, I'll invite you back in to comment.
It sounds really, I mean, we hear about claims coordination in the voluntary benefits space a lot. My question is somewhat around, many of the medical insurance companies themselves offer competing products. So even if they opt in, even if the consumer opts in and wants to use this kind of integration, what if the medical insurance company doesn't want to, if they're competing against them, right? Which, and this is a growing product line, likely that they'll want to be competing in this area. So
yeah, you're hitting on a key issue here. So this implies some level of coordination probably across firms for different products. And I do think that this plays on your ecosystem theme of people will understand that they have to fit into the ecosystem, and that will make for some uncomfortable decisions about data sharing. I think we are already seeing in the market carriers being willing to think a little differently. Co-opetition is a term we've heard thrown around a bit. And I think that 10 years from now, this will be business as usual, I think.
how hard do you think the integration will be? Just when you think about all they probably use, those medical insurance companies probably use their own codes for describing different kinds of diagnoses or claims. Group insurance companies use their own. Like, how complicated do you think this is from an integration perspective to even pull this off?
Yeah, I mean, I think it is difficult. Anytime you're sharing data across, you have to have some level of industry agreement on what means what, and I think that is a challenge. But again, I think people will start to realize that the services their company offers are not really differentiating on some of these back end things. They're differentiating on product and price and service, and particularly as the service element is what drives customers crazy. We're going to have to solve some of these data problems to get to that higher level of service. So the last scenario is something I call lifetime portable benefits, and addresses the issue that benefits you have with one employer don't extend to benefits you might have with another. So let's talk about Danya. Danya is a art major, liberal arts school in the Northeast. She's class of 2029. She's happy, she's graduating. What has happened though, interestingly, just as she's graduating, her school has launched this thing called the Alumni Value Network. And what it is the school wanting to stay connected to its alumni for their lifetime. And there are certain benefits that are offered for her being able to provide her profile information and engage with this network. Certain service providers on the back end are offering her services. So when she gets her first job out of school, she has portable benefit options provided by the network, and that includes the basics like health and dental and life insurance. It also includes some interesting options that she's not really ready for, things like loans and wealth management, because she's just starting her career. But by virtue of the fact she's getting this through an affinity model, she can pick and choose which of these she wants to engage with. She can get them in place. And if she decides to then change jobs, become a gig worker, own her own business, whatever the situation is in her career from this point forward for the next 30 to 40 years, the network benefits continue and carry across each of those situations. So what the value to obviously to the school, they're going to stay connected to their alumni. They're going to have an opportunity to build a relationship. There's already a good connection, a feel-good connection that starts with graduation. So it's good for the school. It's good for Danya because she's got benefits always at the ready. It's really good for the providers who choose to participate in the network because they are getting a lifetime, an evolutionary lifetime of access to a consumer and the ability to build a very long-term relationship. Turns out Danya ran her own business. She's here at her 25th reunion talking to some girlfriends about what her business is like and how the whole thing has gone. She's bought homes. She's had all kinds of financial transactions. She's looking forward to retirement already because she's done so well. And that is all managed over a lifetime by the network. So what is the summary here? We start with a national health and wellness network delivered via affinity. That's the very first step out of the door for Danya. It's portability for a lifetime. Every benefit follows her around. It's complete career flexibility, the ability to be a gig worker, own her own business, change jobs as much as she wants. The benefits are always there. And from the carrier point of view, it's a relationship that adapts and extends to Danya's changing needs. And that is really important because over 25 years, there's a lot of value to Danya. We all talk about cross-sell and upsell. This is starting with the relationship, and the cross-sell and upsell are much more natural, I think, in this case. So we'll turn this back to Todd for one more set of questions.
Okay, I can go again, I guess. I can see the value in this, I guess. And she works for herself. So, but what if she worked for a larger employer? And I think, one of the benefits of group benefits or voluntary benefits is it can come right out of your paycheck. You don't have to wait. You don't have to go to bill pay yourself or wait for a check in the mail. It just comes automatically out of your paycheck. So in this scenario, would Danya be losing that? Would she be losing the advantages of working for an employer that takes care of that for her?
That is a challenge. I would say bill pay would be one important aspect of this. One thing I like about it, just from Danya's perspective, is it keeps her benefits front and center for her. doesn't hide them behind an automated transaction. So if you can make the process easy enough, it actually, I think, would make for a more thoughtful use of benefits over time. But it does, yeah, it definitely challenges the notion that, you know, the paycheck and management of the paycheck falls on the employer. In this case, yeah, she's going to be a little more hands-on with her benefits.
Okay. And it's similar with Bob, just when she's lacking that relationship with the employer, will the employer then, if she worked for a bigger employer and she gets these benefits through the affinity group, would she then be able to have a holistic view of all of her benefits through the employer, or how might that work? Would there be a disconnect there from the data perspective?
Yeah, I have to say, I don't think employers particularly some employers will like this model because it removes benefits as part of how they manage and retain employees. I think that's an important part for the employers. But again, from a customer point of view, from a consumer point of view, the thing this gets around is the portability issue. And she is likely, we know from statistics that Danya is likely to have many more jobs than you or I had in our careers. It's just kind of the nature of employment today. So I think on balance, it's a trade-off. We're trading the employer's ability to influence the attracting and retaining employees, but from the consumer's point of view, it makes a whole lot of sense.
Thank you for joining us for the discussion today. I definitely enjoyed it. I think Craig did too. It's an interesting topic, group insurance 2030. Hopefully we spurred some new thinking on your part for planning purposes. Regardless, we would look forward to staying engaged with you. If you have any questions, please reach out and let us know. And with that, I'll leave it to Craig for the last word.
Thanks, Todd. Yes, it was an interesting conversation, and I want to thank our partners at Vitech for launching this conversation. We look forward to engaging with you further.